contain a stock's primary advance out of a base. And it does usually a pretty good job of that. And because the 21-day is a little further away from the price action, you actually get a stock oftentimes moving down 10 to 15% or maybe a little more by the time it comes down to the 21-day, which is more in line with what I'm looking for when I'm trying to buy a pullback or recover shares that I've already scaled out of into strength. So going back to that Coupa example that I started the presentation with, if I initiate a position here on the breakout, let's say, again, I highlighted many of the typical areas where you would buy coming out of strength to add to a position, but look at the 21-day, which is again the magenta line here, containing the advance all the way up to here. That's an 85% advance over 15 weeks, all supported by the 21-day. So you can see 1, 2, 3, 4 upside reversals with support at the 21-day, where you could have taken advantage of that momentary weakness and added to a position before you finally got a break. And then when you finally get that break, you can reverse some of these shares and make a decision. Do you want to hold your lower cost stock? Do you want to just take your profits in the stock or wait and see what happens to the 50-day? You can make your decision then. But again, buying the weakness on the upside reversals is going to give you a much lower cost basis and can always adding at new highs. And then finally, we have the 50-day moving average, which is our classic area of support that almost all large, big winning stocks will visit and revisit multiple times during a big run. I've been involved in creating many model books for the firm over the past 2 decades. And oftentimes that 50-day moving average or the 10-week line will contain a stock's entire advance from the initial breakout all the way to the peak. So it can be extremely powerful, and it's a great place to add to positions if you can tolerate, the pullback. And that's kind of one of the benefits of being kind of swing trading around a core position, is that by taking some profits into strength, you have a little bit more comfort when a stock is pulling back and you're now, your stock might be 20 or 25% off its high. It gives you a little more confidence to kind of go in and recover those shares because you've already locked some of the gain in. And I will always aggressively buy the first pullback to the 50-day. So this is C Limited, one of the huge winners of last year. It wasn't a stock I was involved in. I kind of missed it, never really entered it, but it broke out of this cup with high handle and